Good morning, master traders and money magnets. It's so great to see everybody. Once again, the SPY has set a new record, another new all-time high, closing above my 661 level for the first time ever. It hit the 664 Fibonacci extension level and also bounced off the 5 DMA. This is coming after we back tested a previous breakout area, and I am referring to my wedge here, my rising wedge, where we broke it out last week on the 11th, back tested it as a support. Yesterday, the market makers showed that they accepted this breakout level as the new buy zone, and here we are at new all-time highs. The price action continues to be bullish. How much more does the bulls have? How much more strength do they have? I tell you, as far as the intraday price action, it wasn't too bad. I had this 662.5 level that I was watching and it cleared intraday. I also alerted in the group. 662.5 cleared, putting 664 in play. We managed to hit that 664 level and it was good for a level-to-level move, but then we had the false breakout setup, which was also alerted in the group. 664 failed as support, putting 662.5 in play. It was good for a level-to-level move unless you got faked out on the breakout, but if you played the trap, got a level-to-level move. But after that, that was it. We just chopped. We were range bound. Nothing much happened. It was very unfortunate. So not much of a move, but we did try to get what the market gave us, which wasn't much. But I tell you this, guys, I have a feeling that we're gonna get a very, very nice move incoming very soon. And even though I say I have a feeling, it's more than just a feeling. Allow Unco to show you guys. So I've been using the not the dark pool, I'll get to that later, but I have been using the option flows, and you guys can see almost 1 billion in premium for calls compared to 19 million. This is a big change from what we've been seeing lately. We've been seeing puts dominate, a lot more money going into puts, but for the first time in a long time, a lot more money is going into calls, but not just regular money. This is almost $1 billion heading into calls. I can't even remember the last time I've seen this. It's been a while. Of course, my filters are looking at the 100K premiums or above. I have my expiry time frame 1 month out, above the ask, and I'm looking at the sweep orders and the block orders only. And yeah, almost a bit, $998 million in premium. Now we need to take a look at a few things because Uncle, looking at this data, I'm expecting a big move soon. Okay, these are block orders. A lot of these are unusual orders as well. But you can look at these calls. What do we notice about these calls? If you take a look at them, their expiration dates all for tomorrow, September 19th. And then we have to look at the strike price: 610, 615, 600, 600, 590. Was another one, 635, 630, 600, 610. You guys can see with your own eyes that these are very in the money calls. So what does that tell us? Well, from my experience, I've been trading for over 8 years now, and from my experience, seeing contracts like these that are very in the money, it looks like whoever is buying these contracts, which is the block orders, they're institutions. But these institutions are likely going to exercise their right to buy SPY at these much better prices. So whoever got the 600 contract, they're likely going to buy SPY tomorrow for 600 at the 600 strike price. And that's a great deal considering how high SPY is currently. Now, some of you guys might be hearing Uncle and might be thinking, well, if they're going to exercise their contracts to get those better deals, that means it's going to be a lot of buying, correct? Yes, there's going to be a lot of buying, which also means there's going to be a lot of selling. So just because we hear that there's going to be a lot of potential buying doesn't necessarily mean we're going to head up higher, although we have been going up higher. But in this case, this is a big change from what I've seen yesterday and the day before and last week. That's why I figured it was worth mentioning, because this is a lot of money and they're all in the money contracts. So if they're gonna exercise their right to buy those shares for these prices, somebody has to sell it to them. So while there's gonna be a lot of buying, there's gonna be a lot of selling, right? So buying can cause the price to go up, but selling can also cause the price to go down. So we need more information, Uncle Charters. I got you guys. So we scroll up a little bit, we can take a look at the puts. Now here's what's interesting about the puts. A lot of them also came in as unusual orders, but look at the unusual orders of puts. Out the money. 645 strike price, 643 strike price, 644. This one's 642. A lot of these puts are out the money. So whoever is betting to, and look at the contract dates, the expiration dates, 23rd, 22nd. They have a little bit of time on them. So I believe whoever's buying these contracts, it looks like they have a strong opinion that the market is going to drop. These are out the money puts, and we're seeing in the money calls. All signs are pointing to bearishness. Don't shoot the messenger. This is how I'm interpreting it. I could be wrong. And if I am wrong, comment below. Let me know your opinion. Let me know your thoughts. But in the money calls, from my experience, they usually get exercised. And if there's going to be buying, there's going to be a lot of selling. And then you combine that information with the out the money puts. Wow. But what make me feel good about tomorrow is all these contracts are September 19th. I don't know if the market's gonna go up or down tomorrow, but I'm hoping, based on this information and this data that I'm looking at, I mean, almost $1 billion in premium, guys. I'm hoping we get a move, because lately, look at this intraday price action. For someone like Unco who trades it level to level, this is acceptable, but it's not that good. I want something great to trade. So we have to go back to the price action, go back to the charts. No matter what the option flow says, we have to combine it with the charts, because the price action is the true shepherd. And once again, I do have the 5 DMA. We have to look at the 5 DMA, because as you guys know, when the market is bullish, it spends lots of time, or majority of its time, above the 5 DMA. Today we bounced off of it. We're going to get bearish. We need to see price below the 5 DMA. We need to see a rug pull. We need to see fear in the market. But no matter what happens, it always begins with the false breakout setup. So what was the level that was cleared today that's never been cleared before? It was that 661 fib extension level. If you want to be bearish, 661 must fail. The 5 DMA must fail. I have 659, which I think is a dark pool level. Let me go to dark pool levels for you guys. 659.22. 3 billion in premiums around that level. That's a lot. $3 billion in premium around the 659 level. So we go back to the chart, and we know the critical levels that must fail. 661 to set off a false breakout setup. 659, which is dark pool level. Those levels break down, they can start off a major reversal. But of course, we'll have to deal with that 655 level, which is around the breakout area. So below 661, below 659, and below 655, Unco will be leaning bearish. And I believe we're going to find out tomorrow. We're going to find out tomorrow if SPY is truly bearish or not. But if not, SPY will either chop or continue to melt up. And we're going to continue to get these low volatility intraday action. And if that is the case, the next level that must clear is 664. That's the 200% fib level. If it clears, more upside is possible. 666, 668, and 670 would be my next target. But remember, it always starts with a false breakout setup, which means 661, 659 dark pool level, and 655 breakout level all must fail to get things started for the bears. Here's triple Q, a gap up with a doji. What's the range of that doji? 593 to 598 is the range I'm watching for triple Q. Anything in between, Uncle will lean neutral. I'll be neutral. But if we can break out of some resistant levels, stay above 595.5, that's a fib level, and then the doji's high around 598, I would be bullish in favor we go hit 600 plus. But if it's truly pullback time, we need to break down the low of that doji, get below 593, 591, and then the critical fib level at 589. We break down those levels, and then Uncle will lean bearish. NVDA managed to recapture the 20 DMA today. That's a false breakdown setup. We broke it down last Tuesday, cleared it, recaptured it today. So for tomorrow, the 20 DMA will be the equilibrium level. It's currently at 175, but it could change tomorrow. But based on that, above 175, I'll be bullish. And if 176.5 and 178 clears, that's bullish follow through, and it should send us back to all-time highs, or maybe new all-time highs, 180 to 184 range. But if it is time for a pullback, like I said for triple Q and SPY, it starts off with a false breakout setup. So the last critical level we cleared and recaptured today was the 20 DMA around 175. So for tomorrow, we must break down 175, and if we do, NVDA could send us back down to 172, 170, 167.5, or much lower. Here is Tesla. Didn't quite break out the chop range. It did hit the liquidity area, but didn't quite break out. If it's time for a pullback, Technically speaking, we did manage to clear the 416 fib level these last couple of days on Tesla. So if it can break that down tomorrow, that can ignite a false breakout setup, maybe inspire the bears to take some profits and push the price back down to the 400s or lower. But if not, and we're above 415, we're still overall bullish on Tesla, and we still must clear 420, 424, and 426 to give us new levels above, possibly up to 440 and 442. Definitely would be possible, but we must clear 426 officially on the daily chart. Here is IWM, and it went and hit my 245 level. Very happy about that. It cleared 241, 243, and 245 was hit. If you traded IWM, I saw someone comment on IWM the other day, so hopefully you was able to make some money. But if we clear 245 tomorrow, more upsides incoming. 247, 250 plus incoming. But if we do want to play a pullback or a bearish position, now this 245 level is technically a macro level fib level that I have, and now that it's hit, it looked like this little V-shaped pattern here. But now that 245 did hit, and if we are to trust any rejection, 243, 241 must fail. We trust the rejection from resistance when support levels fail, and that should put 239.5, 238 or much lower in play. Be ready for anything. Here is Apple, still watching this potential double top. Now I mentioned yesterday that Apple has an inside candle setup, but today it has an outside candle setup, where today's candle, this is a bearish one, today's candle is, the range is bigger than the previous day's candle. So this is the outside candle setup, and in this case it is a bearish one. And I tell you, if 237.8 and 236 fail tomorrow, it will definitely be bearish. We should drop 5, 10, maybe $12 move to the downside. If not, we still must clear 239, 240.8, and 242 to invalidate the potential double top. And here is the VIX, looking like it's trying to bounce. It's closed around the 5 DMA, but we'll see if it'll go up any higher tomorrow. The VIX tend to move in a W-shaped pattern. You can see over here, W shape, W, and then here again, W. And now, I know this is ugly, but here it is. We got half a W. I'm wondering if the other side of the W is going to play out. If that is the case for tomorrow, we could get some beautiful volatility. So fingers crossed for tomorrow, money magnets. Keep the faith strong. Keep the belief in yourself strong. And we're going to manifest some beautiful price action together. I love y'all. Peace.